I am trying to figure out what happened here. In February, you were a little bit cautious. Everybody was. And then you did a great job, and it looked like that you're helping a lot of companies that had to have people go home and work from home. And it turned out that Nutanix was a winner for that, and we haven't given you enough credit.
No, thank you for saying that, Jim. I think as a company, we started almost 10 years ago in a recession. And the first workload, the killer workload for hyperconvergence was virtual desktops. People said Windows is dead, and we said long live Windows. And we went after federal customers and did an amazing job of building a very reliable company. Just taking a step back, we are in the business of building cloud software. And a lot of this comes down to the word software and cloud. You mentioned we moved from hardware to software, but we're really thinking hard about being amorphous, being everywhere, being in the private data centers, at the edge, and in the public cloud. And because cloud is hard, you really need to make it simple, seamless, and secure. But most importantly, you got to have a subscription business model, just like Netflix, just like Adobe, just like Microsoft. Customers subscribe and we stream innovation. So we've been streaming a lot to our customers. We talked about Home Depot recently. They're seeing a record demand in the pandemic, and we really helped them consolidate their infrastructure.
But is it not true, though? I mean, you're switching from license to subscription, so it's hard to really tell for our viewers at home how well you are doing. What's the best way we can measure Nutanix's performance?
I think the best way is a cloud subscription currency. And we started talking about it as of last quarter. We grew really well, annual contract value. Because, think about it, cloud is about consuming smaller things. Hardware was about 7-year entitlements. Software is still 5 to 7 years. We're saying, let's go do 3-year terms and 1-year terms, because you've got to start small. And the recession is also the best time to go back and bite-size what customers really want to buy. So annual contract value is the way we are measuring our growth. We grew 22%, as I said. And it's also going to make this whole transition. I talked about Netflix and others. This whole transition unlocks amazing operational efficiencies for the company as well, as we go and talk about renewals versus new ACV.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.